Hey everyone, meet Trey here. Kachiga. Nah, I'm just playing, but you gotta have some fun. What is up, everybody? Welcome to Trey's Trades, where we have technical analysis in different stocks in the stock market, as well as potential buy, hold, or sell opinions on these given stocks. I'd like to preface by saying that I'm not a financial advisor nor expert, so take what I say with a grain of salt. Let's get into the video. Today, my friends, we're looking at 5 different stocks. We're gonna jam-pack this thing full of good information. 5 stocks that I think have some solid potential. We're gonna run through a bunch of different things. There will be timestamps and chapters on the video. If you'd like to skip ahead, please feel free to do so. But we're gonna look at the fundamentals of each of these companies, right? We're gonna look at different news catalysts that could drive the price action. We're gonna look at some different institutional buyers that have stepped in here, some different statistical numbers in regards to what could come from some of the price action, regarding those numbers, and then the meat and potatoes, which is the chart setup. So I've got a couple different indicators pulled up. I'm gonna get rid of this Fibonacci real quick just to give you what they are. This is the RSI down here, the relative strength index. Anything over 70 is overbought, anything under 30 is oversold. This gives you an idea of both bullish and bearish momentum on a stock and its price action. And then we've got the 200 EMA, which is the exponential moving average, as this purple trend line, and the 15-day MA, which is the moving average, as this blue trend line. And we're going to talk about those. So the 200 EMA is the exponential moving average. This is a price action based valuation trend line over a 200-day moving period, which gives us a macroscopic perspective of the overall price action. Then we've got the 15-day MA, which is the moving average. Some brokerage accounts call this the SMA, the simple moving average. They are one and the same, but this is a price action based valuation trend line over a 15-day moving period, which gives us a microscopic perspective of price action. We use these side by side so we can predict upcoming breakouts or breakdowns, the best possible entry points and exit points, right? So that we can make the most bang for our buck. We're gonna drop some different entry points, some different Fibonacci retracements to give an idea of both bullish and bearish strength of a chart, right? We've got quite a bit to talk about here, so let's just get into the video. So we're gonna start off here with AGTC. What is the company? Why should you care? What do they do? Applied Genetics Technology Corporation is a clinical stage biotech company. The company develops gene therapy products designed to manage the lives of patients with severe diseases in ophthalmology. As of March 31st, 2016, its product candidates included treatments for X-linked retinochisis over 2 forms of achromatopsia and X-linked retinitis pigmentosa. As of March 31st, 2016, the company was engaged in developing 3 discovery programs targeting 3 indications based on its adeno-associated virus vector technologies. XLRSS is an inherited retinal degenerative disease caused by mutations in the retinochisis gene. Achromatopsia is an inherited condition that is associated with visual acuity loss, extreme light sensitivity resulting in daytime blindness, and reduced or complete loss of color discrimination. Achromatopsia is caused by mutations in any of several genes. The company is also developing alpha-1 antitrypsin deficiency. Now, the basic premise of this company, where the value lies, right, is essentially in the potential for them to alter gene mutations, right? So being able to find the source in the mutation that is causing specific eye illnesses, eye diseases that are causing blindness, daytime blindness, color loss, right, whatever it may be, they're trying to find the exact coding within the genetic breakdown that is causing that mutation. So very, very interesting. It honestly hits a little bit home to me because I have this eye condition called bilateral anterior uveitis. I actually had a flare up here today, which wasn't too bad. Luckily, I've got some eye drops on tap, steroid eye drops that take care of that. But if they could, get down to the coding and the source of the issue, that would be monumental. So they've got a couple different products here in the pipeline. Pipeline specifically talking about products that need FDA approval that they can commercialize, right? They've got 5 here, 2 here, and 1 here. So we've got XLRP, ACHM, optogenetics, dry AMD, Stargardt's, right? And these are all ocular, basically, products. We've got the neurodegenerative, right, which is basically neurological breakdowns and degeneration of the neuron, FTD and ALS, and then we got otology, non-syndromic hearing loss. So this hearing loss is separate from that overall eye condition, right? But they've got quite a few products in the pipeline, which we are expecting eventual FDA approval on, right? And since they've got so many products in the pipeline, you can expect different news catalysts to come up periodically through time. So that is very significant. That is something that I want to point out, which could act as an upcoming news catalyst. Personally, for me, I think this is a great long-term hold stock. I do currently have call options on my Webull account and my other brokerage account. I have about $2,000 worth of AGTC, and I do not plan on selling it anytime soon. So great company with some huge growth potential if they do end up getting these FDA approval on all these different products, right? A downside is, since this is kind of a biopharmaceutical type company, right, you're expecting a news catalyst and that FDA approval to go well in order for the price to climb. But there are a couple different positive things that I do want to point out to you, right? I want to be transparent as possible, show you the pros and the cons. And some of the pros are the price targets on this. So if we just look at AGTC price targets, just take a quick peek. We can just take a peek at, I'd type in AGTC analyst price targets. There are price targets between $30 and $35. $34, which are monumental. You can see right here that Roth Capital boosted their price target from $30 to $35. We've got 18 to 24. One has it at 11 here, one has it at 750, but they are all buys. They're all buy ratings, which is very significant. This February 2nd one by H.C. Wainwright, that was a recent boost, so you want to really pay attention to that, as well as institutional buying. We currently have 42.46% of the total shares outstanding, which is 42.6 million, being held by institutions. That is a very, very, very large number. You 100% want to pay attention to where institutions are putting their money, because they're not going to put money into a penny stock they don't think is going to grow. Most recent filings, we've got 4 companies that bought into the company, not necessarily on the 12th, but were filed on the 12th, with just under 20% of the total institutional ownership coming in the past 2 weeks, which is very, very significant. That is a huge, huge number. Keep that in the back of your mind. And then I've got them pulled up on Ortex as well, just to show you some different numbers in regards to what the situation looks like right now. Right, analysts are saying there's a return potential of 121.37%, 5 buy ratings. Average price target of $15.56. And then the utilization rate, which is the current short interest on the stock, not very high. We've got 19.21% of the total utilization coming in on the stock, meaning that out of 100% total lendable shares, 19% of that is currently being held, meaning that around 81% of the total shortable shares are available for lending. So not a lot of people are betting against this stock, which does make a lot of sense. Very low interest rate, cost to borrow, meaning 1.02% annually, not a very high number. Days to cover also pretty decently low. Days to cover signifying, the difficulty of a short to cover their position. There's not necessarily a time period in which shorts have to cover, right? That just states that the higher the days to cover, right, the more difficult it is for shorts to be profitable on a stock. So that is what the current situation looks like. I do have a recent article pulled up right here. Applied Genetics Tech up 37.6% since Smart Trend uptrend call. I'm just going to read the first little bit here. Smart Trend identified an uptrend for Applied Genetic on February 5th, 2021 at $5.11. In approximately 2 weeks, Applied Genetic has returned 37.57% as of today's recent price of $7.03. Over the past year, Applied Genetics traded in a range of, man, what a stupid typo. Bunch of weebs. From $0 to $9.66, and now we're at $0. In the last 5 trading sessions, the 50-day moving average has climbed 4%, while the 200-day MA has risen 1.2. So I see a lot of positive signs here. If we just look at the chart setup here real quick, how things are looking right now in terms of pullback and healthiness of the chart, right? I'm going to drop a Fibonacci retracement. This essentially just tells you the strength of an overall chart setup. We can see that the overall chart setup is not terrible. We ideally look for a 50% retracement. We got about 61.8. Anything above 50% shows a lot of strong buying presence, but do keep in mind that this ran up a huge, huge amount from $3.82. And in fact, if you drop a Fibonacci retracement from the floor down here, you're looking at a much healthier retracement of about 50% if you're looking at a more macroscopic perspective. If you were looking to establish a position in this stock, I do think that now is a pretty solid time to buy. And I say that for a couple different reasons, right? So if we just look at some different trends that we're seeing right here, we can see that there was a downward, a descending level of resistance, which we have in fact broke. All that we're looking for now is that wide range candle bar to break above that descending level of resistance. But nonetheless, it does look like we finally found a floor. And I say that also because we have this descending level of support, which is no longer being respected. You see that break above that descending level of resistance. We're no longer following that downward channel, right? So to me, this signifies the only thing that I'm looking for to confirm that we're out of this price zone is if we get a wide range candle, which is a candle that covers a lot of price action, right? To completely break above that descending level of resistance. So it looks something like this. This kind of candle to break above that level of resistance, to me would signify we have in fact found the bottom. So what is a good entry point for this? If you were looking to establish a position, I do think somewhere around what would be $6.84 and between here at about $7 is going to treat you pretty well as a solid entry point. I do anticipate you're going to see this run for quite a bit of time. As I had mentioned, I do have some call options on this stock. I'm going to pause the video quick just to show you to be transparent. Okay, so as I had mentioned, I do have some call options on them. I do have 4 call options. I bought them all at $1, which means I purchased each option for $100. You're paying $1 per share, and you buy 100 shares per option. So $400 was my initial cost average. I'm currently sitting up about 17.5%. At the height, I was up nearly 200%, and I did not sell because I think there's still upside remaining with this stock. So keep that in the back of your mind. That is the current position. I do think the solid entry point is going to be between that $6.84 mark and $7, and I would watch for a long-term hold play in this stock. Or if you'd like to play some call options, we do know that there is some upcoming known news catalyst. So if we just look at the investors' relations, right, and just take a quick peek at events and presentations, we can see that they're presenting on both Monday and Wednesday, February 22nd and the 24th, starting at 1 to 4 p.m. until 3:30 p.m., here on the 24th. So a couple different news catalysts that could drive the price action, which is why I feel pretty comfortable with some call options. If we look at the overall interest in call options, it is pretty decently high. In terms of puts, not a ton of puts, right? So there's not a lot of people betting against the stock in comparison to the call options. We've got quite a few call options at that $10 strike, 6,300 total, which is pretty solid. You can buy those for a lot cheaper than I ended up purchasing my 7.5 call options at 80 cents. So looking pretty solid there for AGTC. Next, Senseonics. I do think this is a long-term potential stock. I personally have a couple different call options on this portfolio. In my other portfolio, I've got a long-term position with about $2,500 established in Senseonics. I have 4 call options as well as 60 shares here, and I've got quite a few couple hundred shares over in my other portfolio. What do they do? What is the why? Why should you care? Senseonics Holdings Incorporated is a medical technology company. The company focuses on the design, development, and commercialization of glucose monitoring systems. The company operates through glucose monitoring system segment. It offers a continuous glucose monitoring CGM system, EverSense, which is designed an implantable CGM system designed to continually measure glucose levels in people with diabetes. The company's EverSense system consists of components such as a sensor, which is inserted subcutaneously in the upper arm by a healthcare provider, an external removable smart transmitter that receives, assesses, and relays the data from the sensor and also provides vibratory alerts, and a mobile application that receives data from the transmitter and provides real-time glucose readings, alerts, and other data on the user's mobile device, such as a smartphone, Apple Watch, or tablet. There are a couple different things that I see as potential here with Senseonics. So we're going to start off here to show you guys their website here real quick. We're going to show you their EverSense system. So as it sits right now, this company, basically the premise and the long-term potential for growth lies in the commercialization of their 90-day system, which they already are selling, right? And then they're in the process of getting FDA approval essentially on the 180-day CGM system, which is already commercialized in Europe, basically trying to get that commercialization across the United States, across the world, right? And they have a 360-day system, which they are expecting to work throughout the next 1 to 2 years. So there's a lot of potential here with EverSense, with Senseonics, and what you're basically betting on, I wouldn't say betting on, but taking an educated guess at, fundamental analysis and due diligence on, is that they are a big player in a competition to the ultimate system here, which is Dexcom. So if you just check out Dexcom here real quick, Dexcom has a G6 CGM system, and the major difference to me is that, yes, this is a continuous glucose monitoring system, but they only monitor glucose levels for a maximum of 10 days. So if they get approval, I already think that the Senseonics, technology that they're using right now, that 90-day system, is superior to the Dexcom system, right? Because it's inserted subcutaneously into the skin, meaning under the arm, as comparison to the Dexcom system, which is, just a patch that you're basically placing somewhere on the abdomen or on the body, right? So it is a little more invasive, right? But this is life-changing stuff for diabetics, right? There are instances where if you can't get a finger prick or you can't scan, maybe you have a malfunction with the Dexcom system, it could be life or death. So very, very significant. I think there's a lot of solid potential here. We just take a quick peek at the system, as I'd mentioned prior. You've got the sensor, which is inserted subcutaneously, the transmitter, which directly messages your data over to your mobile app, to a smartwatch, to a tablet, to an iPad, whatever it may be, right? So you can continuously monitor your glucose levels. Now, let's say you don't have your phone on you, don't have any technology on you. That's okay, because the sensor will actually give you vibratory alerts when you need to monitor and take care of your overall glucose levels. So there's a lot of positive things that I think are capable of happening here with the EverSense system and with Senseonics. And if they end up getting, approval for that 180-day CGM system by the FDA, which we are expecting sometime within the next, couple weeks to months, right? They said sometime in early 2021. That is going to be a major, major catalyst that is going to drive the price action up on this exponentially. I personally think this has a lot of potential to be an $80 stock by the end of the year this year if they end up capitalizing on and getting FDA approval on that 180-day system. So very, very solid potential here in terms of Senseonics. If we look at the overall institutional ownership, I'd say anything over 10% is significant. We do have 19.24%, 71.6 million shares as comparison to the shares outstanding of 372,000 total. In terms of recent buyers, we had 4 companies step into this on February 16th. Not necessarily meaning they bought on the day, right? But it was filed on that date, right? And we've got 4.75, 11.5, 3.12, and 5.89. So a lot of companies are stepping into this as of late. You want to pay attention to where big money's going, and the more recent that these guys bought into the company, the more significant the information to you, right? So you want to pay attention to the most relevant information in terms of who's buying into a stock, news catalyst, right? Fundamental value. That is significant. So there's some big players in the game. I think there's some significant upside in terms of Senseonics potential. We do have a press release here. So Sensonics Holdings Incorporated is also scheduled their fourth quarter and full year 2020 earnings release and conference call on March 4th, 2021 at 4:30 p.m. Eastern Time. So that could act as another solid news catalyst, right? We are expecting, I shouldn't say we are expecting, but you are hoping that the earnings call is positive, which should drive the price action. Now, you can play it out a couple different ways. If you want to play this off short term, you could buy into the stock anticipating there's going to be some hype leading into that earnings call, right? There typically is. And an example of that to me would be AGTC. You can see an example of that right here on the charts, right? They had an earnings call this day. The price action drove up, even though it was negative, right? Just because of hype and anticipation. So there's a couple different ways you can play that off, both short term and long term, right? But that is something that I want to bring to your guys' attention. Last thing I want to show you is Ortex. There is a pretty decent amount of short interest on Sensonics. We've got 78.61% total utilization, meaning that there's only about 22% of total lendable short shares available at the moment, which is not very high. That's a pretty low amount, which means there is short-term potential for a squeeze. Cost to borrow is also decently high. That means it's 16.42% annually, right? So that means that the risk involved for shorts to hold a position in the stock is higher. That's why the cost to borrow will go up, because brokerages and clearing houses will say, hey, this is a risky short. You're going to have to pay us more interest if we're going to lend you this money. So that's good to see as well. And the days to cover, anything over 1, I think is significant, which means that currently it is tough for shorts to cover their positions. That doesn't necessarily mean that shorts need to cover, right, by that 1.55 days. Shorts can hold their positions pretty much as long as they want without getting a margin, as long as they don't get a margin call, I should say. We all know what happens, but essentially that is just saying how difficult it is going to be for shorts to come out profitable on their position in the stock. So a lot of good things happening here. We've got some upcoming known catalysts. We've got that earnings release, which should be pretty solid. If we look at their events and publications, right, their upcoming events, we know that they have 2, right? So they've got their fourth quarter 2020 earnings. And then Thursday this week, we've got the 10th annual SVB Leerink Global Healthcare Conference. There's speculation and rumor that they're going to announce approval or denial of that 180-day CGM system. If it is approved, my friends, that is going to be a freaking grand slam play for Sensonics. And I'm so freaking pumped for this stock. So that is looking very, very solid. I'm very excited about Sensonics. And as I said, I do have a position in this stock. So in terms of technical setup, we're just going to show you guys this on the 1-month chart. We've got a huge gap here between the 15 MA and the 200 EMA, saying that this is, in fact, in bullish territory. On the RSI, is sitting at 50. Has been consolidating for a little while. In my personal opinion, consolidation does favor buyers. So the longer this trades sideways, the more confirmation and the more buyers are going to have step into this just based on the overall price action we're seeing. We got a George W. George W. being a double bottom. Double bottoms are bullish in nature. That typically indicates an upcoming run, right? And if we just take a peek at previous price action, the last time they had a double bottom, in fact, we had a triple bottom to George W's essentially. We saw a huge, huge run in price action. So if this is any sort of confirmation as to the possibility of what could come, that looks very solid. And this looks like a very solid entry point, right? So we've been consolidating for about 2 days, had a couple ups, had a couple downs, but a solid buy-in point for me is if you see this come back down to this ascending level of support, and you can get an entry at $4.50, that is going to treat you extremely, extremely well. So I'm going to level this off at about $4.50. Don't look for that exact number, right? If you come within 5 cents, 10 cents, that's not bad, right? So if you get this at $4.60, you want to hold this long term. I don't think it's going to treat you bad. You want to get the short term. Obviously, the lower you can get, the better entry point you can get, the better off you're going to be. But I really think you're going to be leaving some briefcases on the table if you chase a bag on this. I really do think this is a long-term position stock. So very, very solid in nature on the charts. We're looking very, very bullish. Nice consistent volume, which makes this predictable. In fact, the last 2 days of consolidation, the volume has been down, which to me signifies that people aren't selling their positions. They're in fact holding, right? Lower volume days does decrease the volatility if it is consolidating, which I do not mind at all. There's a lot of solid confirmations here on the chart that is saying to me that this is a solid setup for Sensonics. Next is going to be MVIS. This is my baby. I love my girl Mavis, dude. What a positive stock. Absolutely love Microvision. So if we just look at what they are, what the why is, Microvision Incorporated is a developer of laser beam scanning technology. The company markets its technology under the brand name Pico P. It has developed scanning technology that can be used in products for interactive projection, consumer light detection and ranging, automotive LiDAR, and then augmented and mixed reality. Pico P scanning technology that can be adopted by its customers to create high-resolution miniature projection and three-dimensional sensing and image capture solutions that use laser diodes as the light source. The company offers key components for inclusion in its scanning engine, including its microelectrical mechanical systems, which is MEMS, and application-specific integrated circuits. The company's Pico P scanning technology incorporates its expertise in two-dimensional MEMS, lasers, optics, and electronics to create a small form factor scanning engine with lower power needs than many other technologies that projects video and still image to capture three-dimensional data. So essentially, this is kind of like, I don't want to compare it to Tesla because that's a little bit of a stretch, but this is, in my eyes, the technology side of things, a Tesla in terms of the amount of technology and things that they offer, right? They're a disruptor. These guys are an absolute disruptor. So if we just take a quick peek at their website, I want to show you some of the technology, why I think there's such long-term potential for this company. To be completely transparent, this is my largest stake that I have in my portfolio. I don't have them on Webull, but on my other brokerage account, I've got a hefty stake in Microvision, and every opportunity that I have to add to them, I do. So they've got not a million patents, but quite a few patents, right? And patents are a great way to give you guaranteed revenue, guaranteed growth, right? So that is a very positive thing to see. They've got source coding, silicon design, hardware, systems, MEMS, optomechanical, advanced manufacturing, and capital equipment, right? So these are, I wouldn't say exciting, not sexy, but they're ways to generate revenue and ways that the company can capitalize on and kind of ladder their way up through different, technology that they offer. It's a snowballing effect. So since they've got so many different products that they offer, if they make revenue on one product, they can work on developing another product or improving another product. And it just keeps bouncing back and forth, and it's a way to guarantee they continue to generate revenue. They've got a projection engine and an interactive projection engine. I don't think these are super sexy either. But the interactive projection engine is very cool because it projects straight onto a desk, onto a wall. You can take a shower if you want and play some Candy Crush, or be cooking a pizza and scroll through a video, right? And we've got the projection engine, which is non-interactive. So they're both potentially the same thing, except this one you can actually use similar to an iPad. You've got the consumer 3D LiDAR sensor, which is great for smart home applications, security, automation, high resolution, low latency 3D LiDAR sensor. The projection engine for head-mounted displays, which is similar to some IVAS technology that these guys offer as well, right, which is utilized by the aviation sector of the military, the Army, right? They use this to help navigate the skies more freely so they can, accomplish the mission. They're also in the works of developing ground troops technology that utilizes the same tech, right? So infantrymen, armormen, field artillery guys, air defense artillery guys, myself included in that equation since I'm an air defense artillery officer, right? They'd be able to utilize this technology to help navigate the battleground more freely. So very interesting AR, MR, and VR technology. And then the thing that we're most excited about is the automotive 3D LiDAR sensor. This is exciting because we've got Joe Biden in office, being completely apolitical. And with Joe Biden in office, green energy sector plays or electric vehicle plays, right? All that sort of stuff is going to be huge for growth over the next 4 years. And they are currently in the works of developing that automotive 3D LiDAR sensor. A prototype came out, my friends, and people went absolutely ape crazy. So that was insane. If that is any sort of indicator to where this stock can go in the future, I am so pumped for this presentation, which is expected to come in April. It is already February 21st, my friends. So we are coming up very close to the day. I'm very, very excited. In terms of Microvision's institutional ownership, we've got 20.31% of the total shares outstanding being owned by big institutional companies. In the most recent institutional stakes that we've seen, step into Microvision have not been recent. They've been, sporadically over the last couple of years. Most recent was as of 2020, March 6th, we saw AWM Investment step in for about 4.3% of the total ownership in the company. So that is probably a con that I do see in Microvision, to be completely transparent, right? You do not see a large amount of institutions that have stepped in as of recently, but I do think that is something that is going to change in the near future. Another thing that I think is significant is this. Apple is reportedly talking to LiDAR suppliers for its self-driving vehicle project. And I think that is significant because Microvision, if their LiDAR presentation goes well, their automotive LiDAR, right, they're going to be in prospect for a potential buyout or an acquisition, a company acquisition. If this happens, candidates such as Apple, Microsoft, Ford, all companies that are trying to get into the autonomous vehicle and the electric vehicle game, they're going to be able to negotiate with these companies and make a deal happen. And that is a lucrative process for shareholders. Shareholders will receive a cut per $1 billion in acquisition. As an example, if you were to look at, I think Whole Foods was bought out by Amazon. Whole Foods, Amazon, buyout, right? There was $13.7 billion in acquisition that came from that, and shareholders received a cut per $1 billion. I don't recall it off the top. So here it says right here, $42 a share in cash for the organic food chain. So shareholders received $42 per share. If I was just to do some quick math, I would think that comes out to a pretty decent cut. Let me just do the math here on my phone really quick. 42 divided by 13.7, you're looking at about $3 per share. So that's not bad in the least bit. And it'd be the same prospect for Microvision. Of course, the overall dollar amount that comes out of that, nobody can say for sure. I've seen numbers float around in that $7 range, but it's a very lucrative process. And if that presentation goes well, my friends, this Apple deal is a big, big deal because we know that Apple is trying to get into the self-driving game. So very significant that they are looking into those LiDAR suppliers. I do think if that presentation goes well, Microvision is going to be a big prospect. If we look at the overall numbers on short interest, right? I do want to point this out to you. We don't have any analyst recommendations in terms of price target. All the price action has been very, very recent. I do anticipate you're going to see some numbers in the future, but utilization is decently high. This is still pretty high shorted stock. So 70.88% utilization, meaning that there's only about 30% of total lendable short shares available to the market right now, right? Pretty significant number. So even though the stock has been going absolutely crazy, these shorts are playing with fire, and there's potential in the short term for a squeeze, right? It's for some pretty solid price action. So potential there for both short-term and long-term investors. Cost to borrow, not insanely high at 7.87%. I do anticipate that some of these shorts have, lost some money. The risk isn't as high since we have been, dropping back a little bit, pulling back a little bit. Days to cover, anything over 1, I think, is significant. So we're getting up there. We're creeping up there in terms of how difficult it is going to be for shorts to come out of this profitable. Days to cover does not necessarily mean that shorts need to cover in 0.96 days, right? It just means that, hey, the higher this number is, this days to cover, the more difficult it is for shorts to come out profitable on their position, right? So the more bullish in nature a stock will be. So there's a lot of positive things, my friends, in terms of what is happening here with Microvision. I think there's some solid potential with Microvision. So we're going to come over here to the options, which is one thing that I do want to point out here. There's a lot of options on that $30 strike as of, I think it would be March 19th. In comparison to the puts, not a lot of puts, right? So there's a lot of people that think this is going to be very, very bullish. I do think there are far more calls than puts. I do want to be transparent and show you both of these, but there's a lot of sentiment out there thinking that Microvision is going to be a big, big player. And my friends, my family, if this isn't the dirtiest double bottom George W. that I've ever seen. Oh my Toledo. That is beautiful. So we've got a nasty, nasty double bottom here, a big fat George W, which is a bullish indicator, typically of an upcoming run that you are likely to see, right? The volume is nice and consistent. We've got a big gap here between the 15 MA and the 200 EMA. In fact, the 15 MA is starting to hook out, which typically is an indicator of upcoming breakouts, right? So that is a solid. And what do I mean by hooking out, right? You can see that this 15 MA is starting to move back upwards in comparison to the 200 EMA, which is moving a little bit downwards. So that looks solid. RSI had some crazy bullish movement, right? We saw a lot of motion here. And this is still very bullish in nature. I feel very comfortable with where Microvision is headed. I think it's possible that you see a pullback to this ascending level of support as an entry point at 1857, but it might not happen, right? So if it doesn't happen, where are you looking at for a potential entry point? You're going to be looking right here at about $20, so $19.90. Of course, don't look for that exact dollar amount, right? This is a general ballpark area. If you can get within 5, 10, 15, 20 cents of that as an entry point, I think it's going to treat you pretty well. As I mentioned, I do think this is a long-term potential stock. I would not hold this, just for a month or for a week or for 2 weeks, right? I'm going to be holding this for years and years and years to come, at least for now, right? Until something fundamentally changes about the company. So looks very bullish in nature. I love everything about what's happening here with Microvision. I think it is going to continue to run and be a big player here today. CTRM, we're just going to give you a quick rundown. Castor Maritime is a Cyprus-based company. The company is engaged in the ocean transportation of dry bulk cargoes worldwide through the ownership and operation of bulk carrier vessels. It also aims to increase its fleet through acquisitions of new and modern vessels. Essentially, what the prospect of growth is here for CTRM is the acquisition of new vessels, right? So they can continue to branch out the dry bulk cargo in which they are transporting, right? The more ships that they offer, the more dry bulk cargo that they can make profit off of. So I've got some different tabs pulled up here. I'm just going to find this here really quick. Castor Maritime. We're just going to show you their website here. So if we look at their website, right, and just look at the things that have happened here, they were incorporated and took ownership of its first vessel in 2017. They entered NOTC under the ticker Castor, and then the NASDAQ under CTRM. They acquired 4 vessels here in the last 4 years. 5 years, I should say, they caught 5. And as of late, they've been on a rampage in terms of acquiring new vessels. I think in the last 2 weeks, they've acquired 3, right? So in terms of, revenue, maybe right now they're putting themselves on a little bit of debt, right? So, by purchasing these vessels, they don't have as much free cash available. Their balance sheets might not look as nice. The available cash might not be as nice. The overall liabilities might be increasing a little bit for now, but in the long term, right, that is going to offer you some solid potential for CTRM. They did just acquire a new vessel. This is as of February 18th, which did drive some price action in the very, very short term. Was kind of short-lived, to be honest. Not a lot of price action happened there, but nonetheless, they did acquire a new vessel. Of course, Seeking Alpha wants me to get a subscription for the product, but take it for what it is. They purchased a new vessel from a third party for $14.8 million. The more they acquire these vessels, the more potential for growth you're going to see with CTRM, and I think it is going to be a big stock that continues to run. As of now, I do think it retraced pretty well. We're going to come back to the charts here, but I do think there's still some potential upside, especially in the short term, right? I don't know that I would personally hold this forever as a long-term stock. I think the most upside probably is going to be the short-term to mid-term, right? Because I think there's going to be some volatility, right? And you're going to leave a little bit of cash on the table if you sit through those swings. I'll keep you guys as up to date as I possibly can, but I do think that you're going to see some pretty solid price action down the road. In terms of CTRM institutional ownership, I'm just going to pull this up here real quick here on Fintel. I typed in the wrong thing, obviously. Institutional ownership. I'm just going to point this out to you so that we can look at all the different prospects that are available to us. And it is 2.3%. Very, very low. So that is a con of CTRM. So they've got about 13.9 million shares owned by institutions out of the 608 million total available shares. But something that is positive is that maybe that number is actually even not even updated, because that's some pretty significant ownership. I do see sometimes some discrepancies between the numbers on the top here compared to the bottom. But, we'll assume the worst. We'll assume the worst and say that it's 2.3%, right? That's worst case scenario. Best case scenario is it's much higher than that. You've got 2%, 4%, 6%, 11. We'll just round that up to 10. So 21, 31, 41. We'll say that's 46% institutional ownership, and one of these companies that bought in was as of February 16th. That doesn't necessarily mean they bought in that day. That's when it was filed. They could have bought in much, much earlier, but that is very significant information. So I think that's something worth noting, right? So recent buyers stepping into the game here. I don't think that would happen. Institutions don't buy into companies they don't see potential upside in. Very awesome information. In terms of short interest, the utilization is insane. So for the past 7 days, the utilization of available lendable short shares has been maxed out, meaning that 100% of total lendable short shares are currently being held in short positions. Cost to borrow, extremely high, 23.85% annual interest being accrued. This number goes up when the risk for these short positions goes up as well, right? Because they want to keep their end of the deal. So that is significant information. Days to cover is low, right? We want to ideally see this number over 1. This doesn't necessarily mean that shorts need to cover their position in 0.37 days, right? Because shorts can cover whenever they want, as long as they don't get a margin call, right? Options expire, so that's the difference there. But if this is a higher number, that days to cover is higher, it means it's in more bullish territory. It's more difficult for shorts to cover their positions in a stock. So this is the only dinger that I'm seeing right now. I ideally would like to see the days to cover number being a little bit higher, but keep in mind that this is based off of 3-month daily volume. So if we look at the 3-month chart here, the volume has actually changed, I would say pretty drastically, right? So if we were to just take out completely the last month of data here, that would exponentially change the picture. I think the days to cover would actually be a lot higher. So keep that in the back of your mind when looking at that days to cover number, but that is what it is at the end of the day. So I do want to point that out to you. The utilization rate is absolutely insane, which leads me to believe that there is some solid short-term potential for a small squeeze. Not even a small squeeze. It could be a pretty major squeeze on this stock. So, if you're looking to get into this position, what is it looking like, right? Well, if we just drop a quick Fibonacci retracement in terms of the strength of the chart, we saw a pretty nice bounce off of that 61.8% retracement. Ideally, we'd like to see 50. 50 is a great bounce off of a level of support, right? That shows a lot of buyer strength, but 61.8% is not bad either, right? We ideally look for 50 or more, but it did see a nice bounce. We did get that engulfing candlestick pattern, which you can see right here, which signifies that we have, in fact, found the bottom. In my eyes, we have the beginning of a very small double bottom. George W. My name's George W., which is typically a sign of an upcoming bullish run. So if you're looking to establish a position in this stock, what is a solid entry point looking like? Well, we've got a nice gap here between the 15 EMA and the 200 EMA. And something that I think worth noting is that you're starting to see the beginning of a little hook out, right? So a hook out is when you see the two indicators kind of diverge away from each other, right? Instead of hooking in, which typically could be a sign of an upcoming bearish run. So I think that you are very likely going to see an upcoming run here with CTRM in the short term. I would watch for a retest of $1.95. That overlying level of resistance is significant to watch. So keep that in the back of your mind. If you're looking to establish a position, I think that now is a pretty solid time to buy. On the R side, it's sitting at 45, has been consolidating for the last 2 days, right? Overall volume not extremely low. The utilization rate extremely high, so there's some pretty solid short-term potential here. I think a buying around $1.20 is going to treat you pretty dang well here with CTRM. Last stock we're going to talk about here today is UAMY. And man, what a freaking anomaly of a stock. Oh my God. I was going to post a video about this saying, guys, I do not feel good about this stock whatsoever since I got that SEC ding, which we will talk about here in a minute, but I am very pleasantly surprised that UAMY held up, and I'll get into why I think that is the case. So what do they do? What is the why? Why should you care? They're a basic materials, mineral resources, metals and mining, and specialty mining and metals company. They basically play in two different factors here. So they get into, a little bit of that autonomous vehicle game because the material, the rare earth metal they use, antimony, which is what I'm going to talk about here in a second, is used by batteries in autonomous vehicles and electric vehicles. And then they are a rare earth metal stock as well. So what do? United States Antimony Corporation is engaged in the production and sale of antimony, silver, gold, and zeolite products. The company is a mining, transportation, milling, smelting, and marketing company. It has 3 segments: United States Antimony Operations, Mexican Antimony Operations, and United States Zeolite Operations. Its operations include a smelter and a metal refinery in Montana and a smelter and over 3 mills in Mexico. It operates through Antimony Division and Zeolite Division. Its antimony smelter and metal plant is located in the Burns Mining District of Sanders County, Montana. It also sells antimony metal for use in bearings, storage batteries, and ordnance. The property includes over 2 5-acre mill sites. Bear River Zeolite Company has zeolite on the United States Bureau of Land Management land. The property has over 2 dryer circuits, one for lines 1 and 2 and one for the Raymond Mill. The Raymond Mill has a rated capacity of over 10 tons per hour. So, I'm just going to pull up U.S. Antimony here really quick. I'm going to show you guys their website, which looks like it came from the frickin' 1990s. Very, very old website. This reminds me a lot of the outdated military websites that I have to use for work. But essentially what they do is they're a U.S.-based company. And that is significant because there has been talk about China cutting off China. I always have to do that. About China cutting off, exporting to the United States of rare earth metal materials. If that ends up happening, the basic laws of supply and demand, my friends, are going to come into play here. So if you cut off supply, the demand goes up exponentially, right? So if UAMY is the only company within the United States, as of now, from my understanding, that is offering this antimony product, the demand for that is going to be so freaking sky high. And there's some different things here that lead us to believe that there's some solid potential for growth here in the future. So one thing that I do want to show you here is United States antimony fundamentals are improving. This is coming from Seeking Alpha, which does typically come in some stocks with a short position. But I wanted to show you the summary. The rare earth and strategic metals have improved outlook due to weaker production in China and increased global demand due in part to battery technology and stockpiling. This has caused many small mining companies such as U.S. Antimony to boom. Evidence suggests the rally in miners such as UAMY is partly fueled by speculative fervor, which could cause a near-term reversal. U.S. Antimony's equity sale will give it a large pile of cash. They did recently have an equity sale, which can be used to expand production and potentially more profitable prices. While U.S. Antimony's outlook has improved, its valuation today is a bit difficult to justify. So Seeking Alpha does think that UAMY is a little bit overpriced. Take that for what it is. I want to present all the information to you that I think is relevant, right? But I personally think there's a pretty decent amount of upside, as do other investors. You do need to pay attention to the overall sentiment of the market. And right now, the sentiment of the market with UAMY is pretty solid. And they had an SEC ding here, which I think I have an article pulled up here real quick on. And we're just going to read that off. So United States Antimony Corporation announces receipt of warning letter from New York Stock Exchange American. So let's just take a quick read here. UAMY, a growing vertically integrated natural resource company, yada, 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 received a letter from New York Stock Exchange regulation, which letter serves as a warning letter as provided under Section 1009. The basis for the letter is that the company sold shares of its common stock in a manner that violated Sections 301 and 713 of the company guide. Trading in the company's common stock has been halted since before the opening of trading on Wednesday, February 17th, as New York Stock Exchange regulation has assessed these rule violations. So essentially, they violated some rules on 2 non-underwritten transactions involving the sale of 26.2 million total shares. They ended up getting that corrected, right? But I thought for sure, I thought for dang sure, that you were going to see this bleed bad. And we didn't see that whatsoever. And I think the case for that is 2 possible scenarios. There's one scenario here, which I think is probably the most likely, is overall attention and hype regarding the play, right? So I think there was some hype in regards to, the attention, the amount of people that got eyes on it. So you might have seen a run just because of the fact that more people were paying attention to UAMY. The second scenario for me is going to be, if I've got the article pulled up here, this, which is the potential of an AMBRI deal. So U.S. Antimony Corporation signs non-binding letter of interest regarding potential supply of antimony with AMBRI. AMBRI is an institution that is invested in by Bill Gates. So that's very significant. Anytime that you see those big name guys that are getting into deals with small companies, that could really drive the price action up on a stock. So keep that in the back of your mind. That is something that I think is very significant to pay attention to. The institutional ownership, I do want to point out to you, is 4.65%, about 4.2 million shares. Not a significant stake, right? And maybe that number is a little bit lagged, but all of these numbers are from back in 2020 or earlier than that. So we'll run with the worst case scenario here, which is 4.65%. I look for at least 10% in a company to signify that there's a huge amount of institutional buying in a company, which I think is a positive thing. So that's a box that we have not checked here, right? I would ideally like to see that over 10%. That is not the case, but it is possible we do see this run down the road regardless. Just going to make sure that I've got everything here that I wanted to read off to you. Ortex is the last thing. So if we look at Ortex and the overall short interest on UAMY, it is not very high, surprisingly. It's actually dropped off a lot here over the last 7 days. It is down to 14.52%. This is not a stock that's being heavily shorted. So that means that currently there are 86% of the total lendable short shares available for lending. The cost to borrow is 42.84%, which is pretty dang high. That is a significant number, so that means there's a lot of risk involved for shorts to buy into the stock right now. Days to cover is low. I would say anything that over 1 is a significant number to pay attention to, indicating that it is difficult for shorts to cover their positions profitably. This does not necessarily mean that shorts have to cover their position in 0.18 days. This is referring to the fact that, hey, the overall short interest as compared to the 3-month average volume is saying that it is, at the moment, easy for shorts to cover their position profitably. So the higher that number, the more difficult it is for shorts to come out profitable, and the more bullish a stock will be in nature. So that is how the current numbers are looking right there. Gonna look here at the charts. There are some options here on UAMY. And probably the most significant thing to pay attention to is this 2.5 strike on 19 March. There is 8,000 total calls on that. So that's pretty solid. As compared to the puts, there's not a lot of puts. So the call to put ratio is very, very, very high. So there's quite a bit of sentiment on here. Typically, calls and puts are a great way to get a sort of, sentiment and idea of what current traders are thinking about a stock. And there's a lot of bullish sentiment in regards to UAMY. Looking at the charts here real quick, there is some pretty nice volume pumping into this. We had the SEC ding, they reopened trading, right? For a while they were halted. They were halted from 216 to 219 essentially, and we saw a huge push in volume which drive that volatility, so that's pretty significant. I do also want to point out that the 15 MA is starting to gap away from the 200 MA. We're starting to see that kind of open up, and that is also a solid thing. So when you see these two trend lines diverge from each other, that is typically an indicator of an upcoming possible bullish run. Nice big gap here between the 15 MA and the 200 MA. If you got into the stock back when I recommended it, when the 15 MA was starting to gap away back here at about 87 cents, you'd be sitting god dang filthy right now, and that is looking absolutely beautiful. In terms of retracements, this stock has been very, very nice. It has not been bad at all. 38.2% retracement, which is almost picture perfect, honestly. And this retracement, with the extra volatility and volume, was not quite as good to us. It did retrace to about 78.6%. But if you do exclude this candle wick, since there was insane volatility at the market open, you can see that it actually retraced to about, I think that is 61.8%. So not a terrible retracement. I do think it is pretty likely that this is going to continue its run. If you are looking for an entry point, what is the best possible point for you to get into this stock? Well, I do think as it sits now, that 192 level is going to be pretty solid. A pretty solid entry point. So if you see this dip under $2, right, I think that's going to be a pretty solid entry point. If you can get within a couple cents to that entry point, that is going to be what I would look for in terms of the way to get into UAMY, right? That is how we're looking here on that chart. So great volume coming into this. Big gap between the 15 MA and the 200 MA. We're starting to see those trend lines diverge from each other, which is absolutely beautiful. Great volume, which is starting to actually normalize and get some consistent patterns. I honestly only have some pretty good things to say about UAMY. I do have a position in this stock to be transparent. You can see right here that I have 800 shares, currently up about 25%. I don't plan on selling these yet. For me, as of now, this is going to be a midterm stock. I want to see some more things develop. If we get that Ambry deal, to me, at that point, I will consider this as more of a long-term investment, but I will be holding my position for now, and I will update you guys if I decide to do anything differently. And that is what I have for the video today. I know that was long. You'll have to let me know what you think. If you enjoyed this style of video, where we just knock out all of these at once, let me know. If you also enjoyed the video, please drop a like. It really does help support the channel, and consider subscribing if you'd like to see more content like this. Lastly, I have an affiliate link in the description box down below for Webull. This is version 4 for the desktop. Great platform that allows you to start trading at 4 a.m. in the pre-market. If you use my link, you get 2 free stocks with a $100 deposit. I receive a free stock. Great way to support the channel, my friends, and if you're not interested, that's totally fine. I just appreciate your support by taking the time to watch my videos. Lastly, as well, I have a link to the merch store in the description box. If you'd like to check that out, join the Gorilla Gang. That would be cool as well. That is what I have for you guys today. Thank you for watching, my friends, and I'll see you all next time. Peace.